Hello, this is Megan Horniman, and I am the Director of Portfolio Strategy here at Verdence Capital Advisors. We come to you today just to give you a brief video that outlines our fourth quarter white paper. And what we thought was timely this time around was focusing on the midterm elections. First of all, the midterm elections shattered records. When it comes to spending, the candidates spent 40% more in this midterm election than they did in 2014. It also resulted in a record voter turnout. This is the first time in history for a midterm election where over 100 million people voted. I just wanted to warn you that this will not be a political opinion about the midterm elections or political orientations. Instead, we're going to stick to the facts and what we do know. Now, when it comes to economic growth in a midterm election year, typically the fourth quarter is the weakest economic growth that we do see of the entire year. So that is something that we should be aware of for investors, because right now the consensus forecast for GDP in the fourth quarter is a little bit higher than what you tend to see in midterm election years. And also, if you look at midterm election years, the year after, you do tend to see higher than average economic growth in that calendar year. Now, if we dig it just a little bit deeper and we look at the new composition of Congress, you do tend to see the weakest average annual GDP. But this is where history can be misleading, because the primary driver of that weakness was the Great Depression. If you remove the Great Depression and look at the current composition, it actually is one of the highest where you see average annual GDP. Now, stepping aside from the economy and looking at what midterm elections may mean for the equity markets, it's very hard not to remind investors about the common financial term that past performance is not indicative of future results. In fact, if you were to just use history and look at a presidential term and how the equity market reacts each year, we've already seen a break from history. For example, in the chart that you see, Donald Trump's first year of his presidential term saw a much higher than average return in the S&P 500. And some may say that's why we're giving back some of the returns this year in year two. Now, when we look at how the equity market tends to perform in the year after a midterm election, it is favorable for the equity market. If you look at the next chart, you'll see that 1 year after a midterm election, the S&P 500 is up on average 15%. Now, the one thing that history does tell us about the equity market in the year after a midterm election is that investors have to get used to that volatility that we've seen in the past couple of months. If you look at this chart, on average, in the 1 year after a midterm election, the S&P 500 experiences a pullback of at least 5% or more every single year except 1994. The average maximum drawdown that we tend to see is 10%. Now, the one thing to remember, though, is if investors had used that opportunity to buy into weakness, the 1 year after that drawdown, the S&P 500 was up by, on average, 19%. So to conclude, the one thing that we want to highlight is that we are not here to speculate on what the political environment may look like going forward. Instead, we would rather stick to the facts that we do know. One of them is that what has happened in this midterm election is not uncommon. The sitting president tends to lose at least 30 seats from their party in their first midterm election. The second thing is that equities do like gridlock. Historically, the equity market has performed better when you have a split Congress and also president. And that could be because they don't think that a whole lot of market-moving rules or laws will be changed during that time. The third thing is that fundamentals for the economy still remain solid. And the one thing that's a positive that we can take out of this election is that the Democrats, because they did not win both sides of Congress, it's very unlikely that you'll see major changes made to tax reform. But in contrast, it's also equally unlikely that you'll see Republicans being able to make tax reform permanent. So status quo on tax reform, and that's been a driver of economic growth this year. Now, while history may be interesting to try and draw some comparisons to what may happen in the future, it can also mislead investors. every midterm election was also accompanied by a very different economic environment. So we are not going to try and speculate over what the political environment may be for the next year. Instead, we are going to remain disciplined, look at underlying economic fundamentals, and also at Verdence, we will always look at an individual investor's risk tolerance and long-term investment objectives before making any changes to asset allocation. With that, thank you very much, and we hope that you enjoy the white paper. Thank you.